So Howard Schuler is a Dutch-American author who writes about Jiddu Krishnamurti, theosophy, and philosophy. He studied philosophy in the Netherlands and at Northern Illinois University. He has a master's degree from the University of Wales on the topic of narrative identity theory and is now a research scholar at Northeastern Hills University, Shillong, India. He became interested in monetary reform after meeting Stephen Zarlenga in 2008. After attending the 2014 conference of the American Monetary Institute, he participated in many of its activities promoting monetary reform. He's a founding member of the Alliance for Just Money. And in 2021, he acted as AFJM's managing director for 6 months during the COVID-19 pandemic. And I'm happy to see Sumal Raj here. So he will be following, and I'll let Govert introduce him.
I will. Thank you, Carol. So let's go on with the introduction of Sumal Raj. He's the founder of Money Reforms India, now about 10 years ago, and he will give us a nice introduction to that organization. He lives on the total opposite almost of India in the far south west in the state of Kerala, which is almost close to the most southern point in India. I'm in the far northeast, but we happened to meet at least because at a certain moment I was with my department, philosophy department in Goa, which is a very nice place in India. And the moment that the class had to return back, we were facing a 60-hour train ride. And, we had already done about 60 hours getting there. And I was like, I'm not doing that. So I took a flight to southern India and met up with Sumal. Then he hosted me for 4 days, and we had some working sessions. One was kind of memorable because it was very close to the residential quarters of the state's bank, the Reserve Bank of India. So that had kind of an interesting little thrill to it. Anyway, enough. He might tell you some more about himself and what he does. The structure of this presentation will be as follows. First of all, the title is the Indian monetary scene. So we're going to sketch some what that means. I will start with setting up that scene with a little bit of history and overview of India with some statistics and visuals. Then I'll give the word to Sumal. He will talk about India, Money Reforms India. That is the official name of our sister organization in India, MRI. The Indians love abbreviations. I've just read a book with dozens and dozens of abbreviations. But it's MRI, Money Reforms India. And I'll give people the URL of that later. After that, I might still have a little bit of time maybe to talk about inequality in India and the introduction of CBDC. So without further ado, let me share a screen of my presentation. And is this coming through, Stephen?
Starting.
I think. Okay, this is visible.
Yes.
Okay, good. All right. In my readings, so I will warn you guys that okay, this is a country of 1.4 billion people with a history of more than 5,000 years. So to set the scene really good, that's a little bit impossible. So I'm just highlighting really interesting facets. And sorry for the Eurocentrism, but I'm starting with a little tidbit that I found out about the Indian Roman Empire relationships. You know, in the days of Caesar and Antony and Cleopatra, that's when the Roman Empire took over Egypt, and then the space opened up to imports from Egypt, from Ethiopia, from Persia, and there was an enormous demand for all the luxury products that were made in the East. And Rome was actually so smart to really heavily tax those items, and even so much that it funded at a certain moment 30% of Rome's revenue. On the other side, you know, a lot of gold had to be changing hands, so there was a gold drain to the east. I remember also Zarlenga addressing that in his book. Now we're gonna jump, you know, a couple of ages there to the Mughal Empire. India produced then still 25% of world industrial output in 1750. Because of the British Empire policies, economic policies, that percentage went to 2%. And now at the moment, it's growing really fast. So it's 3.5 going towards 5. And actually, the current administration has really very ambitious plan to make that even bigger. Anyway, so during the British Empire, there was deindustrialization. You know, India was not a non-industrialized, you know, agrarian country. It was industrialized, and especially in the textile manufacturing. But they got blown away by competition from the British. So for about a 200-year period, economics were suppressed to the hilt there. You know, they didn't even get a 1% growth. And now, you know, they're catching up, and it's between 6 and 8%. Anyway, since independence, they had a slow start, kind of socialist planned economy with 5-year plans. Actually, those plans are still there, but they're calibrated now towards more liberalized philosophy. They went into industrialization. The service industry is coming up, especially in the 1990s that came up. And there's now really robust growth, but there also increased inequality. And I'll address that later. I found this really interesting visual of the GDP throughout the ages from year 1 till the year 2000. And as you can see, there were 3 regions or empires that went above the 30% mark of global GDP. So in year 1, that was India. And then you can see, if you keep following that orange line, you know, with a little bump around 1700, it just only went down, 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 and then a little upswing, you know, around 2000. Then China, the red line, went twice for it, once almost, and then in the 1800s, they had, like, you know, enormous amount. And look at the decrease when, you know, you had the rise of the USA and Europe. So you see, you know, the upswing of China, a very steep upswing. They're really, you know, going full ahead, full speed. But that little uptick in India, there's another way to look at that, and that's you know, GDP growth of India between 1954 and 2020. It's growing, and if you would also look at a graph about per capita income, it's almost exponential. So you know, they're catching up. They're really doing good. I'm going to, you know, kind of pop around with these statistics, current statistic, like the population, 1.4 billion people in 2022. They were second, but apparently they went to first place. They have overtaken China. GDP is 3.7 nominal worth in GDP. But the purchasing power parity, meaning how much you can buy with it, is like, you know, 3 times, 4 times that amount. And from my own experience, I can say, yeah, if I go shopping, maybe for $3 or $4, I can have all my all the groceries, but at least produce for a whole week. Eggplant, onion, potatoes, cabbage, you name it. And I come out with a bag, a couple of kilos, and I'm set. So a lot of things are very cheap here. So your rupee can go pretty far. There's a similar difference then in the GDP per capita. It's about 2.6 nominally, but 9,000 in PPP measures. This does not mean that every Indian has 9,000 bucks at hand to spend a year, and because inequality is so high, but I'll get into that later. GDP by sector, the three big sectors are agriculture, industry, and services. And agriculture, when I saw this number of 18.8%, I was like, wow, that's way smaller than I expected, because the kind of original view of India is like, well, it's a very rural country, and yeah, they are developing, but you don't necessarily, until you see the numbers, you don't know in what manner. So yeah, agriculture almost 19%, industry 28%, services 53%. India's motto is a little bit like, well, let China be the big production facility of the world, and let us be the back office, and that's what they're doing. Once I got in trouble with my credit card here in India, and it's an American credit card, and I called the number, and I got a lady from Mumbai on the phone to help me out. So that's the back office of the world. But anyway, so in agriculture, you can see that, wow, it's still 42.6% of people that work in the agricultural sector. So that's then you're getting the sense, yeah, that's recreate that image a little more of like, yeah, this big chunk is still very rural and engaged in agricultural activity. Anyway, inflation, the RBI is the Reserve Bank of India, their target is 4%, and they can go 2% over, 2% down. They got it a little bit under control, under 5.62. I'm not going to give too much attention to these numbers because I cannot yet make a really good story out of it to make it intelligible. that you get a good impression of what's going on. But there are certain things that are interesting. Okay, I forgot about this graph. That is household debt. Let's not yet go into that. Little story about the banking sector, structure of Indian banking. There's a central bank that got nationalized in 1949. There are public banks. Originally, they were all private banks, but in 1969, under Indira Gandhi, she nationalized 18 of them. And those are called PSBs, public sector banks. Private banks are upcoming, especially since the 1990s, when so-called liberalization took place, and also a lot of non-bank financial corporations are coming up. And foreign banks, I was looking for numbers, but there are about 46 foreign banks active in India, but I don't have yet numbers like how important they are. Now, the next graph, let's look at that, because there's an enormous shift going on at this moment in power and deposits taking between the private banks and the public banks. So this graph, if you go from left to right, are the years, somewhere between 2009, 2010, 2011. On the bar, the dark side is public banks, and a little bit of light part on top, that is what private banks were taking in per year in deposits. So in 2011, 2012, 2013, 2014, it's kind of the same. And then suddenly the public bank intake is dramatically going down. Actually, in 2017, it was negative. And so most of deposit taking was done by private banks. And you can see then in 2018 and 2019, it's really the private banks that are taking up. And there's a little story behind that that I'll address later. But there is a big shift going on from private banks or from public banks to private banks. Here again, I just gonna hop around a little bit. You know, first bank in India was the Bank of Hindustan in Kolkata, 1770. Apparently, in the 1930s, there were 1,258 banks, and in 1947, there were 82 only left. I don't know what happened. I still have to look into that. But the Reserve Bank, the Central Bank of India, which plays such an important role, was established or constituted in 1935. Then in 1949, 2 years after independence, it got nationalized and put under the Ministry of Finance. In 1961, another interesting thing happened. India introduces, after some bank failures, the Deposit Insurance Act. And it was only the second country in the world after the US did this in 1933. I had thought like, oh, you know, okay, in the 30s, in the 40s, you know, Western countries in Europe, they would have instituted deposit insurance. They did not, not you know, before 1961. So I thought that was an interesting thing. I tried to find out how much was covered in the beginning, but I haven't figured that out. But at this moment, it is 500,000 rupees, which is about $6,250, which compared with, you know, America, where a couple of years ago it was 100,000, then it was up to 250,000. And at this moment, apparently after, you know, the March problems with the banking industry, it is all deposits. And there's a little Indian angle to that I might get into. Anyway, let's not talk about the rupee. As I told, in 1969, there was a big change in the banking sector because 14 major commercial banks were nationalized by Indira Gandhi. She had a big project to combat poverty, and one of the ways to do that was to get bank services into remote rural areas. So the marching orders for the banks was, you know, set up branches everywhere, give, you know, banking services so people can trade, so people can do transactions, so people can take out, you know, smaller loans. So the amount of branches from in 69, which was about 8,000, that went up very quickly to 62,000. And I found out in 2019 that went up all the way to 120,000. There was some, of course, criticism from the opposition that she did this, but apparently a lot of them said that this was actually a really good move and that it helped India to develop further and you know, get its economy going. I'm gonna hop around. I'm still working on to really try to get it into a way of making it a story, but I'm not yet there. So I'm going to skip a little bit there. What was important is that what happened was that because of lax oversight of the banking industry, a lot of banks had made bad loans, but kind of covered them. And there were two series of investigations by the central bank to figure out what was really happening. And the most severe one was around 2015 with a new head of the Reserve Bank of India, who really wanted to know what was going on. And that created a bit of a crisis because they found out that the banking industry was really, really in a bad shape. Actually so bad that he, for a little while, the RBI said to the public banks, like, you cannot loan any more loans for a while because you have to, you know, clean up your act. And so that was in 2016 that he went into negative. But anyway, so this was happened. On top of that, there was the demonetization. That's when 500 and 1,000 rupee notes were taken out of circulation to combat crime and fraud and other items that also created quite some havoc. I will not get into the details. This is all for more stories. I'll just stop here that the GDP per capita from 1600 to 2018, you can see here that around 1600 was still above 1,000. And around 1850, it had gone even under 1,000. And look how that is going up exponentially. So this is a little bit of some trees of the wood of the Indian situation. I do have more about monetary literacy, but I'll first give the word to Sumal to give a little presentation on our sister organization, Money Reforms India. And Sumal, I'm glad you're here. And by the way, I'm glad my Wi-Fi is working because all day it was not working. It gave me some nervous feelings about technology and about this presentation. Sumal, go ahead. Yes. And I'll stop sharing.
Yeah. Money Reforms India. We are advocating for a new monetary paradigm. I have written a write-up. I'm going to read it out. So that would be better. In 2014, a dedicated and forward-thinking group of individuals in India embarked on a mission that has transcended generations, the reformation of the country's monetary system. This ambitious endeavor is driven by the group of unwavering commitment to shift away from the prevailing debt-based monetary structure towards a more equitable and sustainable alternative. To amplify our cause, the group has established an online presence utilizing the power of the internet and social media to spread our message. This online presence includes a website that serves as an information hub, disseminating insights into our monetary reform agenda, a dynamic Facebook page posting a substantial following of 1.7K individuals who are keen about monetary reform, an active and engaged Facebook group consisting of 70 members where discussions, insights, and updates are shared, fostering a sense of community among like-minded individuals. One of our group's most notable initiatives has been the filing of numerous right to information queries with India's regulatory authority, the Reserve Bank of India, as well as with various banks operating in the country. These queries have sought to unravel the intricacies of bank money creation and related financial matters. However, the journey was not been without its share of challenges. The response received from RBI and banks have often been elusive and non-committal. Some replies have cited that the information sought does not fall within the purview of the Right to Information Act, while others have dismissed the queries as hypothetical or seeking opinion rather than concrete data. Notably, certain Indian banks have refrained from acknowledging their role in credit creation, leading to a veil of ambiguity surrounding this essential aspect of the monetary system. Undeterred by these hurdles, the group remains steadfast in their commitment to monetary reform. They have even made a formal request to the RBI urging them to publish a bulletin akin to the one released by the Bank of England in 2014. It shed light on the mechanics of money creation. Regrettably, this request remains unfulfilled, adding to the urgency of our mission. Looking ahead, our group is contemplating a significant step forward, filing a legal case in the Supreme Court of India. This case aims to question the legality of banks' inherent right to create credit money. Such a move underscores the group's unwavering resolve that their belief in the necessity of challenging the status quo to effect positive change. It is noteworthy that in the recent address, the RBI governor emphasized the nuanced artistry of monetary policy making, particularly in the unique context of India. He underscored that achieving overall macroeconomic stability, fostering innovation, enhancing productivity, and nurturing sustainable growth demands an approach that transcends to arts. However, the group maintains a counterpoint, suggesting that treating monetary policy as a science offers a path to their intended outcomes, further highlighting the multifaceted nature of this ongoing monetary reform movement. Okay, thank you.
Thank you, Zamal.
Okay.
Would you like to add anything to that, or maybe say something more about your own?
I think you can continue. That is all
Okay.
from me. Okay.
Yes. No, that's a very nice statement and good one, and we can put that on your website. I'd say, even on the AMI website as a statement. So otherwise, let me get back to my little project. Let me see where we are and talk about monetary literacy in India. A very interesting poll was taken by a Dutch polling group or company. Actually, one of the owners of that company is someone that is involved in monetary reform. So that was his idea. So that was conducted in 2013, 2014, so about 10 years ago in 20 countries. Most Western countries and all the BRIC countries were involved. So it covered 75% of the world economy with a total of 23,000 respondents. The main conclusion is that knowledge about who creates money is low amongst international population. They focused on two specific questions. That is, first one, who do you think creates more than 95% of the money in circulation? The possibilities of the answer would be either governments or central banks or private / commercial banks, or just say, if you don't know, you just say don't know. The second question would be posed is, who do you think should create most of the money? And again, 4 possible answers: the government, the central banks, commercial banks, or you don't know. So in general, and we got all these countries here, and I have the link online to this report. It's only 4 or 5 pages, and it's really interesting if you get deeper into it. But I zoomed in on one little box where here India, the US, the Netherlands, and Italy are concentrated. Just to get some interesting insights there. So on the question, like, who do you think created more than 95% of the money in circulation? So this is the snapshot. You can see here 34% in India says it should be it was commercial banks, and they scored second, and this is in the second part here with these scores. They scored second of all the 20 countries. with 34%, saying, yeah, we know it's commercial banks. Interesting was South Africa scoring highest with 35%, then Mexico with 33%, and then at the bottom, to my astonishment, it's Belgium at 14, China, Canada at 13, Russia, Netherlands at 12. So they were the highest in the incorrect answer. Further, what you can get out, what I got out of it, is that also India was the most opinionated country because they had the lowest amount of people who said they don't know. And I thought that was pretty interesting too. So 13% of Indians said, yeah, well, I don't know who makes most of the money. And then again, if you go to the ones who scored highest, Belgium and the Netherlands, in Belgium it was 47% that said, yeah, we don't know. And in the Netherlands was 43%. Saying they don't know. So those were astonishing numbers where developing and non-Western countries were actually outdoing the West in, let's say, monetary literacy. As far as it comes then to who do you think should create most of the money, again, that it would be central or commercial banks who should do that. India scores high, but that is again, I think, because only 9% has no opinion about it. So all the numbers like about, go up then, the more people say, I have an opinion who should do it, either government or central banks or others. So they actually score pretty high in saying, well, together the state, 39 plus 29%, that's a robust 68%, says, yeah, it should be, one way or another the state, either commercial bank or either the central bank or the government. Again, just to pick out these numbers, so who do you think should create most of the money? That it should be private commercial banks. Yes, they score high. South Korea also, Japan also. And then somehow the Netherlands and Russia seem to have the most aversion against commercial banks making the money. So somehow they're redeeming themselves by saying, okay, let's not have private banks do that. But you have to take into account, of course, then who said that they don't know. And again, as I said, India seems to be the most opinionated country in there. And the Netherlands, together with the USA, let's say relatively the most ignorant country. 47% of the Dutch were saying, yeah, I don't know who should do that. And in the US, the same. I was a little surprised about the number in the US, thinking that with a more conservative, capitalist, individualistic mindset and also anti-government mindset, the US would have more of an opinion and would, fall towards, let the commercial banks do it. Don't let government do any stuff because that's, you cannot have that. With a little help of Sumal, I went also into monetary literacy in the Reserve Bank of India, and he addressed that. I saw some of the correspondence that he had with the RBI, and yeah, they're seeming to duck the questions or do as if they don't understand. And the questions were quite, clear about, who do you think makes most of the money? Who's in charge of money creation? And somehow, either of ignorance or intentionally, they didn't want to say. I have no idea, after a lot of looking, what commercial banks know. I know in the West, a lot of the big banks, especially after the Bank of England came out admitting, who makes most of the money, Big banks like Paribas in France, or Deutsche Bank in Germany, or ABN AMRO in the Netherlands. They all came out saying, yeah, that's the truth. But in India, I haven't found any bank, coming forward with that. In academics, it's an interesting situation. Sumal shared some textbooks. And here there's a little quote there, various ways of creating money. Banks can create money in several ways. They are: one, loans and advances. Banks provide credit facilities to business by way of loans and advances, overdraft and fresh credit. When a loan is granted or overdraft is sanctioned, the amount of loan or overdraft is entered into the account of the customer, and he is allowed to draw checks upon the amount agreed upon. Thus, the bank creates a deposit in the name of the borrower. And banks can create more credit by making more loans and advances. So in some textbooks, I've seen that the credit creation theory of money making is clearly there, but there are also a lot of textbooks where it is not that clear, or are they mixing up all the intermediation theory with the multiplier theory, with the credit creation theory, and they make a big mumble of it, and it's not always clear. I found that apparently there are a lot of exams done with questions about, well, who makes the money and how is it working. So I found one website that helps people to prep. It's called the Prep website, literally, and there are people that are knowledgeable that give little articles. So this Sunil Kumar D, has this little blurb about credit creation by commercial banks, and on the first line it's very clear. By making new loans, commercial banks generate money in the form of bank deposits. Voila, there you have it. So for me, that kind of connects with the high score in India, that somehow indeed there is this knowledge about what's happening in banking. Because it seems to be, at least in some classes, a part of the curriculum. I could say something about CBDC very quickly. Basically, since 2022, it's being introduced in some towns. I'll be going to Bhubaneswar in Ozira. That's a town where CBDC is being used. And maybe I'll find some people that are using it and can have a conversation with them about their experience. But it will be, CBDC will be person to person, also person to merchant. And interesting also, it will be used by banks to settle their, the reserves will be done as if it's CBDC. So if banks settle their reserves between each other, it will also be through CBDC. But that's, a separate circuit, as we know. There's the bank circuit, there's the commercial circuit. They stay separate, also in the case of India. One little thing about privacy, because that's a big thing in the West, of course. The policy is that small sums can change hands and will be anonymous, but larger sums not. And then they bring in international law, international treaties about money laundering and terrorism funding, and that will be then the reason. And I haven't found out yet, how much and what the reporting requirements are. But they make a distinction between small amounts that will be anonymous, large amounts that cannot be anonymous. Another interesting thing that I found, and that's one of the claimed advantages in India for CBDC, reduction of costs of printing, storage, transportation, and replacement of banknotes. 1 year cost was 5,000 crore, which comes down to $625 million. So they're spending $625 million just to keep, just to maintain the cash, the physical cash in the country. Anyway, so far they say, okay, it's easing also inbound remittance. And that's another interesting thing to find out is that about 35 million people, mostly Indians, of course, in foreign countries, remit $110 billion a year. And of course, if this, they say that if you have the CBDC system going, it will be easier to make these transactions. It will be also used for international payments. So they say it will be easing of those kind of payments. And they're also aware that this money will be shielded from commercial bank risks. So if banks go belly up, whatever you have in CBDC is yours. It will not go down the drain like if a bank goes bankrupt. Last little thing there, as of June 2023, 1.3 million customers using it with 300,000 merchants. So that's in either 5 or 8 towns now, like Delhi, Mumbai, Delhi. But 1.3 million customers is, of course, not much. You know, that's 1,000th of the Indian population. So that is 0.1%. I also just read that the expectations of the RBI that this will take on is not realized. The enthusiasm for a CBDC to change to a CBDC system is apparently not that high. So that's very quick about CBDC, and I'm going to end with some things about inequality trends in India, which are staggering. In this little table, average share of wealth by economic group in India from 1961 till 2020, this is the line that shocked me most. That in the decade of the 60s, the bottom 50% had 12% of the pie of wealth in India. In the 70s, that went down a little bit. In the 80s, also, let's say about 1%. In the 90s, another percent. And then in the 2011 to 2020, it's 6%. So that is half, almost exactly half of in 1960. If you get this trend, you know, to its logical conclusion, in 2070, the bottom 50% will have nothing. Not that I think that will happen, but it's quite shocking, this number. So, of course, where did that wealth go? Well, a lot went to the top 1%. You know, in the 60s, they had about 12% of the pie. And now, even with a bigger pie, a very much bigger pie, that went to 31.55%. So there is an upper class, you know, the top 1%, they're doing really, really well. And, you know, in the middle, people doing well, but at the bottom, it's pretty bad. So here you can see how that kind of goes. So if you put everybody at number 100 in 1960, and then trace how the you know, how developed, you can see with the green line that, you know, it's more than 250% increase for the top percent. The top 10% went 50% up from 100 to 150. And then, you know, as I said, it was a halving, going from 100 to 50 in these 60 years for the bottom 50%. Now, if you compare the increase of the upper class 1% in India with how other 1% did in other countries, if you put countries like Brazil, China, India, United States, United Kingdom, South Africa, and France all at 100 in 1980, the red line, that is India. So compared with China and the United States, etc., their increase of the pie is very dramatic. The second coming in here, that's China. That is the purple line. South Africa is going towards, inequality. That's the blue line. Last little thing I want to say about this is that you can see that it kind of leveled out, this increase of inequality, let's say around 2012, 28, 2010, and that it kind of stayed the same under the Modi administration that came on in I think 2015 or 2014. I'm still figuring out what their policies are and how they have an effect on India, economic policies. But I'm leaving it at this. If anybody wants to have this document with all these numbers and then my sources that I used, a lot of interesting stuff, let me know and I can share it. So I'll stop sharing here and open the floor for questions. And I'll give it back to Carol to conduct that. Unmute yourself, please. There we go. Almost.
Fernanda had a question?
No, I was just applauding, but I guess I do.
Oh.
I was really fascinated by that graph where it's a straight line up until it divides into those three branches, and I was just wondering what field or business that top line went into that increased their wealth so much, since you mentioned like service being one of the main GDP growing sectors right now. Is that all from service, or what was your views on that?
I saw one very rich guy saying, well, a lot is government contracts. A lot of billionaires became billionaires because of government contracts, and it might have been a little bit of hanky-panky going on, some, wheeling and dealing. There's the communication sector, which is going very high, the technology sector, power sector. As far as they have been privatized, there's a lot of money to be made. But otherwise, Sumal, what do you know about, who's getting all this incredible wealth into their pockets?
Yeah, that is from the government itself, government contracts. They are getting some government contracts. Who is attached to the power? Adani and all. They are connected with the ruling government BJP. So they get all the contracts. When they go outside the country also they get contracts. They are getting richer and richer and richer, and the party itself is getting richer. The political party. They are, I think, 6,000 crores. They are worth. The political party is worth that much. Some surveys came. Yeah.
Okay. Can we have John? Also, you have a question?
Yeah, I thought that graph of increasing inequality that you showed was really interesting. And but one of the interesting things that you kind of pointed out is it had leveled off. And I'd forgotten the time scale, maybe over the last decade or something like that. And the question is that real? You've got it for the United States too, but I keep seeing data that seems to suggest increasing inequality even through the last decade. So I'm wondering if things really do internationally across this data set that you've shown level off, then it's really important to know why, because if that gives us a handle on how to control this increasing inequality, that's really important. So do you have any sense of why that has leveled off?
Well, the graph is only about the 1%. You might get a different picture if you look at the top 10%. So it could be that the 1% got to a kind of natural maximum, but the 10% not yet. So there might still be an increase of inequality because the top percent gets more, but it's not the 1% of the 10% that's getting more. So I have to look into that because that would be one of the ways to explain that. Because at the same time, I know that the amount of the bottom 50% is still going down. So that's going somewhere to someone. So if it's not to the top percent, it will be to, the not 50%. So you got a 40% above the 50%, and then you got a 10% above that, of which you got the 1%, which is, it's almost now the 1%, as an expression. But I'll try to look into that, how that's being spread out.
Yeah, because
I almost think there might be a. Yeah, go ahead.
I was referring to the graph that started out with 100 for all countries, and showed this relative increase in inequality. I thought that's what you were measuring in that slide, but maybe I misunderstood. What was?
It was the take of the 1% and their increase in percentage-wise. So their increased the 1% when they started at 100, then they ended up at 280.
Okay. Well, it still raises an interesting question.
Yeah.
Okay.
Yeah, absolutely. Thanks. Yes.
Can we go on to another question? We have Franz.
Yes, I had the same question as John.
Oh, okay.
And I came up with the following answer. After you, Govert, had made the point, it was only the 1%. It's the middle class, the 40% in the middle, that really will probably maintain this. And the real source for that, in my opinion, is the inequality report that is produced by the French economist who wrote a big book about inequality. And he got a couple of California economists on board, and they are producing an annual inequality report. And they really emphasize the importance of breaking it up, not only the 1% or 10% and the bottom 50, but also the 40%. And so I thought that is very important. Also, another right side in that regard, in that report, is that the CO2 per person is listed for the countries they study, which is of course important in terms of if you want to know the equality and inequality in carbon emissions. That's also an important statistic. For me personally, it's very important because the system that the monetary system that I developed is based upon a monetary standard of a specific tonnage of CO2 per person. And so that means they are exactly looking at that.
Thank you, Franz. And I think you can talk about that later today, because I think you're presenting later on today. So can we move on to a couple more questions, because we have hardly any time. Adrian has a question.
Yes, I sort of had, can you hear me?
Yes.
Yes.
Okay. I had an inspiration, I guess. I don't know. Maybe this has already been done. But when Samuel Raj was talking about right to know, I was really excited. And I thought, wouldn't it be cool, or maybe somebody's already done this, to send out to all the banks, credit unions, federal, central banks, public banks, commercial banks, a questionnaire that would be public and online and well, put out there that anybody could see about how their money system works. Do they create money? And
Here we go.
and other such things, the questionnaire could be developed. But I thought that would be a nice way of educating the public and the bankers and the people who work in the banks. So I don't know if somebody's done that, but I just envisioned that happening, and I thought, yeah, right to know. Okay.
No,
Thank
totally.
you.
Yes, when
Great
you
idea.
start talking about making polls, I think our British sister organization, Positive Money in the UK, did a questionnaire to politicians and found out how monetarily ignorant they are. And coming back to this query about those 20 different countries, I would like to see them do it again and see if there is any change in these numbers. That will be interesting also. But yeah, polling the public to see how monetarily literate they are can have good effects. Because you can show it to these politicians and say, hey guys, you're not up to snuff on what's happening, and money is one of the most important things.
Well, actually, what I was envisioning, it was that really turn into a statement from the banks themselves by them answering a questionnaire and it being put on the public, that they would have to find out. Whoever answers that questionnaire would have to find out how they are working. And then it would be a public statement from the banks to the public to be seen.
The polling would take place with the banks, and then others would get the information. You guys have one more, even though you're on our time now, but let's get Reed Simpson in real quick. Reed,
yeah, I'm here. Thank you. Yeah, I've kind of two questions. One is focusing on that top 1% or even 10%. Is there any studies, any way we can determine how that is sliced and diced? Are these individuals, such as I think in America it would be the manager class? You might just be a top manager, and so you get these incentives, and pretty soon you own a good chunk of the company. But even then, within that, the ownership of those companies are kind of unknown. They're interrelated funds, and so I wonder if these are just this top 1% are just these blind entities, trusts or something, or are they individuals? So that's kind of curious to me. And then the second part is these 401ks and all, and cities and counties in America that have all these funds, that excess funds that are invested in the markets, and that's wealth, but they're controlled at the very top by a few people. So there's that huge concentration. I wonder so we know who we're up against. And that kind of the good thing, you think, oh, well, all these 401ks and all, American individuals, the 40% in the middle, own this lion's share of the assets. Well, I don't know if that's true or not, or if that just gets less and less every year.
Yeah, I don't know about the US there. I don't know much or too much about India there. So Sumal mentioned one guy, Adani, and he is very well politically connected, very controversial, very rich, and rich because of government contracts. And my impression is a little bit indeed that most of the billionaires are owners of companies. But I don't know, Sumal, what is your impression about your top 1%?
They're corporates. They are connected with all political parties, and especially when the new government, the second term came, the people who are connected with them became rich. They are all Gujaratis. They get some of our railways, airports, seaports were sold to them. it has been privatized, and further, I think they are trying to privatize banks also. When the public sector banks go in a bank run, or if the assets goes down, they try to sell it out. Likewise, they are becoming more bigger and bigger, and they are taking this money outside and outside the country also, and they are getting contracts like mining and all. I think Adani has that's a gold mining, this one in Australia and all. So they are becoming more and more rich. They are not caring. This huge money is not trickling down towards the poor. That's it. And in India, the rural area and urban area, it's different. It's totally different. These rural area, there are a lot of poor people. Poverty is there. They are not educated. They are still going behind some religion and all, superstition and all. Likewise, I think this development is not coming down towards the lower class. That's the thing happening here in India.
Yeah, that's
Thank
the
you.
whole thing about neoliberal development in India. But that's for another time. We're 4 or 5 minutes over time, so
Maybe the fifth
we'll
largest
leave.
economy, but the poverty rate, unemployment rate, when you check it, it's all lower. The ranking is lower.
Yeah, and it's
And that-
painful. It's painful to look at it also when you travel. You know, it can be heart wrenching.
And the sad thing that
Therefore, we need
privatization
monetary
process,
reform.
that privatization process is just a redistribution of wealth. It's not so much a productive increase in wealth. And the Perkins book on the Confessions of the Economic Hitman shows the exact process that can happen in any country.
And
It's
the majority of
pretty
funds is with the financial system.
Thank you both so much for speaking. I wish I was moderating because I wanted to ask more questions. I wish we could had more time, but I think we ran out of time and ran over. But thank you both very much.